Hey, and welcome to the Evolution Real Estate Podcast, where we stay up with the ever changing modern real estate market. So, Scott and I are here. We're looking to do another live podcast. So, if you're out there, ask questions or what have you. But the reason we do this is because we're having these conversations on a daily basis anyway. So, we figured why not just record it. And, we first started by just recording it not live, and then we're like, oh, what the heck, let's go live in case there anyone out there that wants to interact. So we are live. My job, I'm the loan officer, so Justice Foss with Bell Mortgage. My slogan is Finance with Foss, and my job is to help you get a loan. So right now, a lot of pre-approvals are a little tough to get, and if they're not, then it's tough for Scott to find you a house. So Scott, introduce yourself.
What an intro. Hey, thanks, Justice. Yeah, my name is Scott Ebel. I'm with Greater Midwest Realty here, and I'm just excited to be here. To have these conversations and kind of get out there, what's going on. The tips, tricks, and really what's going on in the market today. So that's why we really do this, to keep catalog and put out the honest talk or honest speak of really what's going on in the market today, here in the Twin Cities market. So. Yeah, no, that's who I am. I know we always kind of kick it off with interesting things. Justice, what have you been up to? What are some interesting things that have been going on with you?
Yeah, so anyone that follows me on social media probably saw this, but I just got a new car. I had ordered it about a month ago, but that didn't come without a little story about me being an idiot. So uh, I'll quickly break it down. And Scott, you probably don't actually even know this story or what car I'm driving now, but I just bought a new Mazda CX-5 because I wanted an SUV, but that's kind of besides the point. So my old car, I got the call last on Tuesday that my car was ready to go. So I cleaned out my current car, and while I'm cleaning it out, I get to the trunk, and for closing gifts, I like to give like obnoxiously large bottles of champagne. Well, I had three in my trunk. When I opened it, I only had one left.
Oh
So
no, oh
yeah,
no,
two of them had kaboom. So me being a non-drinker was of the assumption that if it had alcohol in it, it couldn't freeze. so so
really?
yeah, so I learned now that's not the case. But so I open my trunk and I find, one still in the box and then two more that are like this. I'm like, oh, that doesn't make sense. Why would a glass bottle be leaning like that? So yeah, needless to say, they had shattered and it was a mess. So I cleaned that up. And that was what was it. Then Rachel and I got in the car and we drove to the dealership. And we get to the dealership and we park there. I'm like, before we go in, this is my last time in this car. Let's just like triple check I didn't forget anything because I have a tendency of doing that. So we're checking the car and whatnot. I pop the trunk and I have Rachel go check in there. Uh, and I come around the corner to the back, and I also forgot that there's like a little like lever hat latch in
Oh
there.
yeah, yeah.
Um, so with that, we popped that, and well, I found where I was missing like a little car jumper thing that I always wondered where it was, but also inside this hatch was the rest of the champagne. So I've been driving around with probably a bottle's worth of champagne in this little hatch in my trunk. So
Oh
needless to say,
no,
my car smelled like a boozer, but then it had, yay ounces of champagne. And so we're like, what do we do? We got to go in because we were late for our appointment. So we go in, sit down, I start signing papers, and we're talking and stuff. And then the guy goes to go do his thing, and I'm like, hey, we better like scoop that out. We better do something about that. So Rachel's like, oh, fine. So she goes and grabs like a cup and then scoops all of that stuff out. Uh, and then like pads it down because it was like, a nice surprise. Um, but we did not tell anyone because we figured it's going to get cleaned anyway. So we got it like cleaned up, but figured, they have to detail it anyway. So it's going to get clean. They're just going to think I'm a big boozer. But yeah, that was our little excitement story when we went to go get the new car.
Well, it's just a little champagne to congratulate them for with their new
Yeah,
car.
yeah, yeah. Whoever's in it, yeah, we gave them an extra celebratory
It
drink.
just wasn't in a bottle. That's all.
Yeah, yeah. So that's me being an idiot. And I've now learned like alcohol
Ah,
doesn't necessarily stay that way. So
you
yeah,
realize we live in Minnesota, right? The weather. Yeah.
yeah, yeah. Well, now I know
All
it's
right.
like 100 proof whatever that doesn't freeze. So
Yeah.
yeah.
I'd even be suspect at that, but yeah, no, I get
Yeah. So that was our
it.
little adventure. So if you followed my story at all, there's a picture of me standing between my old car and my new car and a big like essentially looking pea spot behind it, and that's where Rachel had dumped out all the champagne.
Oh, okay then.
Yep. So yeah, that was my latest story.
That's fun. That
Yeah.
is fun.
What about you?
I can't even match that. I'm not even going to pretend. I'm not even going to say that I can. I got nothing,
You got
um,
okay.
I got nothing when it comes to that, but I think really unusual or unique or just interesting. I think it's an interesting time where we're at right now, and
Yep.
just kind of the conversations that we continue to have and share with people is and as other people do, that are in the industry and kind of sharing where we're at. I mean, we've got the pandemic still looming in the background. Now war in Ukraine, and obviously the last couple of years of stimulus and how that's affected our market and industry and a lot of people with cash on reserves and kind of sitting on cash and then of course we've got our current housing market, right? The inventory where we're at, and we'll get into that and kind of talk a little bit about that as far as where we're at and what we're seeing and in the 13 metro county area. And then, just really what's going on in the current market. Obviously, you'll touch on interest rates, or we always talk about that too. And I'm sure you got some things to share about what interest rates are doing, and because everybody's always interested or has a concern about that. So, yeah, no, as far as trying to, compete with your champagne store, I got nothing. I got nothing, brother.
Well, luckily there was some pop up over my face, so you probably couldn't see my expressive reaction in the recording. But yeah,
Yeah.
I felt like an idiot. But we got it.
Oh well.
Whatever. Oh, I'll
What do you
follow up
do?
to that. Yeah, follow up to that. That they then called me the next day. I had missed the call. They left a voicemail and said, "Hey, Justice, it's so and so from Mazda, whatever. Give me a call. I have to talk to you about something." So then, so
No.
Rachel and I are freaking out. We're like, "Oh no, we're in trouble. We got like, well, whatever. It must have been more cleaning than we thought, or something like that." Turns out he just undercharged me $200. So I just had to pay a little bit more in. So that ended
Oh,
up being not a big deal. But yeah,
well, you
whoever
sure that
whoever
wasn't
details that,
a
yeah, I
cleaning fee?
apologize. Yeah, that's what I figured. I was like, I'll pay it if there is one, but yeah, I guess the
Yeah.
detail, whoever details it, will just like be like, oh, this guy. But whatever.
Well, extra work for somebody.
Yeah,
Yeah. So
yeah. Give us some market update.
yeah, let me go ahead and start sharing my screen. I'll give you a market update of what's going on here and take a look at kind of the numbers and really just let me know when you're able to see my screen.
Yep.
You should be able to now. So this is information provided by InfoSpark that's part of our MLS or fed to our MLS. So and what this is a line chart, 3 years, monthly graph, and kind of as you can see, just kicking off number of homes for sale. And if I hover over that, currently in the Twin City market, we're at through February. Now that was through February. 4489 homes on the market currently through February, and that's kind of where we're at right now. Always move over to then look at what closed sales are, and kind of an indication of where we at and what's coming off the market. Through February, new updated numbers are 2856, and that's kind of what all sold last month through February. So it's pretty indicative if you look at the chart here. As I've shown in the past, that we're pretty close on, a little below last year, year after year, but you can see how these charts are pretty similar in effect of what you're looking at. You got the peaks and valleys. So
So now
fully
should start
suspect that
that
we're going to
jump.
Yeah, and that's
Okay.
kind of leads to the next portion of months of supply. That's the third tab here. We always take a look at whenever we do this and have our conversations, because really that's indicative of where the market's going to go and what's going to happen. And so pretty traditional, as we always speak about, that during winter months of supply or inventory, or homes for sale definitely go down. But as we start now getting beyond the holidays into March, February, March, April, as you can see from last year, and it starts to gain speed. So through February, they must have updated these numbers since over a couple of weeks ago, but because last time I read this or we're looking at it, was at 0.7 months of supply, which is, to be honest with you, it's an all-time low. I've never seen those kinds of inventory, that kind of months of supply. It's, as you can see from the chart, and this goes back 3 years.
Yeah, this is 3 years. What would it look like? I don't know.
Yeah.
2050.
Well, we can go back. I mean, here's
Oh
so
yeah,
good
look at
question.
that. Oh man.
So this, that's a great question. Here's a
Jeez.
monthly rolling of the last 10 years. I don't know if we can go to the max, and that goes to 2005. So this is back to when, the market was at its height, and then it started to, we had that correction.
08,
So
yep, the 08, 09, yep.
yeah, 08, 09, all the way, through 11, and then on into 12, and started dipping again. And this is, yeah. So if you look at that trending over the last, 17 years or what have you, yeah, that's what inventories look like. So it gives you a better, our viewers a better idea of really what we should have, or what normally is on as for inventory. So we definitely need more houses to hit the market. And that's what everybody's always talking about. So I'm going to go back here, and then, so new listings, that gives you an idea. So as of December was our bottom, and now moving upward, we're trending upward, as we will continue to. So back here again,
that's even higher than last year.
So February,
or
so
roughly
47.79 through February last year.
Oh, okay.
We're just a little bit below.
Okay.
So it's not quite where it was a year ago. So just a little bit below. But yeah. But we are getting more listings on the market, but they are definitely selling. So it's that's probably some more of what we'll talk about later on in this podcast, as far as what buyers are having to do to be able to get an offer accepted, and really what the market looks like. I think that's another topic that we've been talking about a lot lately. Not only you and I, but also in our weekly meetings, and just trying to strategize of how to be able to, what it looks like moving forward. So, how about you? So that's kind of the market. I'll stop sharing unless there's some questions, or maybe somebody online has some questions, or.
Yeah, no questions yet. Yep. Yeah, I don't see any questions yet. Yeah, that's it. What does this chart look like zoomed out a bit?
We'll take a look at this. We'll go to the 10-year on new listings.
Oh, wow.
I mean, so yeah, and so these are winter months are the lows, and once again, the summer months. So pretty consistent. I mean, you can look year after year of what they all do. Where our selling and listing and buying cycle really is. If that makes sense. So this is looking back 10 years anyway, but pretty similar year after year.
Yeah, and you can see the COVID dip in that 2020 range. That's interesting to see.
Yeah, here up in here, that it didn't peak like the previous previous years, 7-8 years prior to that.
So the peak month is typically what? July?
July typically.
May.
June, July. May.
Okay.
As you start to see here, some of these are May, June, April, May, depending on the month, but yeah, May.
Okay, so here in the cities, we'd probably, and I know it's slightly different for everyone, but we'd probably assume spring market is what, late March, early April?
Yeah, I think it's already starting. As you can see the uptick already
Mm-hmm.
as it's coming back. So it's already had started. After it usually starts to trend after the holidays, right? And
Yeah.
depending on the weather helps also. When we start to get these 50-degree days, people want to get out, right? They want to get active and get after it. And a big thing too for families and people with kids, that's a part of it. Not only is the weather a big part of it because they don't want to move their stuff during the winter and drag it through the snow, but so also, when school starts and ends, that becomes a great time for people with kids to make the transition.
Mm-hmm.
So you find some of that also. So
Hmm.
yeah, but yeah, that's kind of what's going on with the inventory and the market right now. We definitely need some more houses. There's no question about it. And it's definitely an interesting time. So we'll see what what comes. A lot of predictions of more of the same this year. I know that didn't Chairman Powell just speak or just have something to do yesterday, and didn't he do something with rates yesterday, or what are rates doing now, or where are we at with that? I don't know if you
Yeah.
got some things to share, maybe talk about rates. I can stop sharing my screen unless we got some questions about inventory and kind of what's going on with the market and the cycles. But I can give you back the screen and
Hmm. Yeah, I mean, let's see.
there's
Let
something,
me let me
there's some things you
share.
want to share about what rates are doing. I think a lot of people are always asking or wondering, what are rates going to do? And because that's always the $1 million question, isn't it?
Yeah, it sure is.
Affordability.
Are you able to see what I'm sharing here? If not, let's see. I'll switch to that. You should be able to see it now.
Yep, I can see it now. Yep.
Okay, so what we're showing here is the U.S. 10-year Treasury. So mortgage rates don't necessarily follow this to a T, but they have been pretty, closely related to it of late. And you can kind of just see. I mean, look at the. Let's just zoom back a little bit so we can see here December 30th, right, of 2021, and then the new year started, and oh boy, did it jump. Now this chart doesn't make it look like much of a jump, but it is when you zoom it out. Look where we are in September of 2020. I mean, look at,
Wow.
yeah, I mean, you zoom out and you're like, oh my God. So, looking at this jump right here, December 2021, now up into January. This jump was pretty big, and then it just started a trend. Now you will see this little drop here. This has to do with Ukraine. So
Okay.
when, you know, Russia was starting to invade and do stuff, the market was like, okay, yeah, this will be quick. This won't, not that Ukraine will fall quick, but then Russia won't actually like invade, or if they do, they're going to pull out right away. Then it became known that they're going to stay in there. So then the world started being like, oh crap. Then there was word that it was getting a little better. Then it was word that they were, doubling down nuclear talks and stuff, and it dropped. And now things have kind of like, almost in a way, people kind of like with COVID, people are getting fatigued. People are news fatigued from COVID. They're news fatigued from Ukraine, as quick as that has been, and inflation and everything that has to go into the rates. We've quickly seen a big rebound. So this right here represents uh, 0.5% in interest rates, probably roughly
Okay.
this
Okay.
this increase. And this is in a matter of 3.3 to today at 3.17, 3.18. That's a pretty big jump. Now switching over to Freddie Mac's info, you can just see this. We going back to December 30th, where we saw the bond markets, right? and then we saw the bond markets jump up, and then look how the rates have then continually increased. And now we are over 4 on our 30-year. Historically, still a great rate, but the bias of the recency bias, it's gone up quite a bit. So purchasing power has changed. Qualifying borrowers have changed. The first-time homebuyer programs, if this is higher, first-time homebuyer programs have higher interest rates for the ones that borrow money. So everything is just kind of going up. Now, if we, again, kind of just looking at this bond market, and we go back to, well, it's not going to have it at the 1 month. Let's see, 3 month. Push it back to before COVID. You can see how high we were before COVID with the bond market, and then COVID happened, and it just took a nosedive. So we're kind of like, you can see this. If you pretend this section right here in the middle didn't happen, the COVID stuff, you can see we kind of are just continuing the trend that we were on before. So, take COVID out of the equation, and we're kind of right back to where we were going. So zooming back out, you can see.
Justice, I'm not able to see that again. I don't know if it went away or.
Oh, okay. Well, I know our viewers can see it, but
okay.
The trend lines are essentially back to where they were. So unfortunately, that's kind of where rates are going right now. And now I'm switched back from unsharing the screen, but yeah, the rates are definitely going up from where they were, and we continue to do so. So I was listening to a podcast. Well, actually, this was like an in-person training kind of podcast thing, but a guy went through all the predictors of why rates are where they're at now, and what kind of pushed them to where they're at, and then where they're going. So his current prediction was, and this was before the current, rate hikes that we just had by the Fed and then actually by the bond market. But he's like, we're hitting 5 by the end of the year without question. His also prediction was we might see a downtrend in 2023 where rates will come back to the 3s. Now, again, this is all prediction stuff, but that's kind of interesting. So he's like, you're going to hit up, a lot of buyers are going to get tight with qualifying because of interest rates, which will slow down potential buyers. So we're not having listings with 70 offers. Maybe it gets back down to some reasonable number in the time being. And then next year, people who bought this year might be ending up refining, and or months of supply will hopefully be improved by next year. And then that'll help buyers along with lower interest rates at that point in time. So kind of interesting. Well, obviously this is a crystal ball kind of thing, so we'll wait and see, but that's kind of the rate update for now.
Okay. Yeah, no, that's good news. I mean, well, I don't know if it's good news, but it's, it's just really what's going on, right? It's what's happening today and what's going on in the market. So segue off of that and just kind of talking about buyers. I know I got a number of folks that I'm out there helping and we're out there working, but the reality of, for anybody else that's out there, I mean, we are and have been in a multiple offer situation. I think most people know that. Just due to inventory and what have you. So whenever somebody is out there, some of the things now, none of this is absolute, but it's just kind of what we're seeing and indicative of the market. But if somebody was making an offer on a property, just a list price offer typically is not going to win the bid. Can't say that for sure, but just
I can back that up. Yep.
Put that out there that we're seeing over bids, people offering more. When buyers do that, there's, depending on how high they feel they have to go to be competitive or to win that offer, there's always that question of being quite a bit over whatever it was listed for, and the question of the appraisal. That's the next subset or the subsequent question that comes into everybody's mind. And so what agents have since done or developed, or I don't know, it's just out of necessity, I guess, is that we're seeing and have seen what's called a gap clause, an appraisal gap clause, where a buyer comes in and says, we will cover if the appraisal is not come into what we needed to. We will in fact cover up to, $5,000 or $10,000 difference up to a certain amount, right? So you're seeing a lot of offers having that verbiage in it, which years ago was just not the case. And then
and then on our end for qualifying, we have to be able to prove. So like when we're doing pre-approvals, like we have to show that they have those funds on the mortgage side. Otherwise, that's kind of like it's a not an empty threat kind of thing. But like if they don't have it and they get accepted and the appraisal clause comes in, then like they have.
What do
That's
you
part
do?
of the pre-approval. Right. Yeah, it's part of the pre-approval. So that's part of a strategy that
this is something that
we work together on that.
This is where we haven't talked about. So that's great that you guys are doing that, and great to hear that, because that's obviously the next level, because there's a lot of players, right? There's a lot of people helping in a transaction, whether it be an agent, the loan officer, the title company. You've just got so many people that are in this process, but everybody's got to do their job and correctly. And so it's great to hear that you guys are actually verifying and knowing that they have those funds available, that not just a false claim or just words that, oh, well, we'll back it. Well, how do we know that? I guess the question is that'll come up is that for folks that aren't doing that, and now do they not qualify, and or what happens? I guess that's a whole nother
scramble mode.
I don't know that we got a whole lot of time to talk about that today, but I mean, I just, as we sit here, there's always tell me more, and there's questions that arise in my head anyway, for the, next question or what next, or what about this, so when we're seeing that, the appraisal gap clause, I mean, that's pretty common, where years ago it never even was a thing. Asking for sellers to pay buyers closing costs. Not saying it doesn't happen, but it's, once again, that's directly related to the seller's net. And most of the time people are going to start to, in a very competitive buyer's market, a lot of the opportunities or clauses that you would have in there for a buyer, or a buyer would ask for, are pretty much stripped away, and they feel like they need to do that to compete. Talking about that, even home inspections of if you're asking for a home inspection, how many days to get the home inspection done, I've even heard and seen other agents where they bring inspectors with, and they'll do a pop by or a kind of a impromptu showing inspection, and kind of satisfy their questions to the condition of the property when they go and view it, and potentially people are waiving inspections, not saying that you have to or that you need to, but these are some of the things that we're seeing with some of the buyers and buyer agents of how offers are being written. So other things, also like earnest money, what people put up for earnest money is discretionary. So you can put up whatever you feel deemed necessary, but some we're starting to see that some buyers are even allowing or saying, what, I'll make a portion, some thereof, of my earnest money non-refundable, or all of it, or what have you, that, hey, I really want some to know that we have some skin in the game. We really want your house, and we're going to move forward. So those are some of the other things that we're seeing.
Yeah, question with that. I actually don't know the answer. So when you do a non-refundable earnest money, is that referring to, like, if you do an inspection and then walk away, do you forfeit that, or how does that work?
I would say that whatever you describe in that purchase agreement is non-refundable, that you're, and that's a great question. I haven't ran across, as far as, you're right, if you're allowed to do an inspection, you're right.
It's probably just specifying it, whatever's specified in the purchase agreement, it's probably what it is. Right,
correct. Yep.
Okay.
No, that's a great question. I mean, are you still allowed to do the inspection, and then, but you're saying non-refundable on a portion of it or all of it? Well, is that after the inspection? And you probably would want to spell that out, that once all contingencies are removed, earnest money is, X amount, or full earnest money to be non-refundable, to spell it out so that it clearly states when that period starts and moving forward. So, no, that's a great question about that. Um, yeah, and then I guess also the other important thing is type of financing. Are you going conventional? Are you going FHA? Are you going VA? Cash? Some folks are coming in cash and then leveraging later, and putting refinancing or put financing on afterwards. So those are some of the techniques to raise your offer to a certain pile when you're competing with other people. So that's just kind of some of the things that we're
that's
starting to
called
see.
delayed financing on our end. So
Okay.
if they buy with cash and then refi within the 6 months, that's called
Yeah.
delayed financing, and it has certain type of restrictions to it for how much cash they can get back out. But
Okay.
it typically ends up being like as if they would have done 20%. So that is another strategy for someone to be able to purchase.
So talking about that, so that's good to know for people out there that are utilizing that strategy. If you do a cash, you do a line or whatever, and you're expecting to replenish or to put that money back, that once you're going to the bank and trying to get that new financing in place, it's not like a original purchase, correct? That's what you're saying. I mean, it's in as far as the terms of allowing you to maybe, because some people may want to come in and only put down 3.5% or 5%. But so now just understand and know that for most qualifications and or underwriting standards or guidelines, they've now changed because it's what did you call it? You called it
It's called delayed financing because now it's a refi
delayed.
because you own the home and
Sure,
it's almost
sure.
like a cash out refinance.
All right. So it's just in a different underwriting guideline process, I would say.
Yep.
Interesting. So for anybody that, utilizes that, to know that ahead of time that, hey, you're going to have 10 or 20 or 50, percentage down. It's not just going to be you're not getting it all back, or borrowing it all back out. That's good to know. So,
Yep.
No, I think those are the things lately as far as interesting or, most pertinent things that are happening right now in the market, what we're seeing with buyers and sellers. I mean, it's a great time for people to sell. There's no question about it. For people that have that opportunity to be able to sell and can do some other things, it's couldn't be a better time. So, yeah.
Other
No,
things
that's
I'm seeing too is having flexible closing date. I mean, not that it's the same market, but that's what helped me get my house in 2018 is we got our offer accepted, but we said we'll close whenever. So we ended up, getting it in late
yeah,
March, early April, and closing in late June. So,
sure,
just being open to that. You and I talked about sunset clauses. So if you come in with a really like hefty offer right off the bat, putting a sunset clause saying like, "Hey, offer good till midnight tonight, accept it or it's void," kind of thing, and kind of like pushing the
sure.
hand of a seller to try and be like, "Hey, like this offer's competitive, let's be done with everyone else." Um, I know those are a couple of the other things that I had written down here. Um, the other aspect of this on the finance side is making sure. Well, I guess there's one more. Would be this would the recast. So the move up buyers who currently own a home, buying their next home non-contingent, so qualifying with both houses. You can do that with a 5% down, and then when you sell your current house, you take those net proceeds, put it into your current loan with the new house, and then it re-amortizes the payment. So then it acts as if you put 10 or 20% down, based on how much you put in there. So not a lot of banks do that. So it's a helpful thing that as long as you can float both payments and come up with the cash to do 5% down on the new house, it allows you to get in non-contingent and then kind of like reset the loan payment as if you did that 20%, 10% down anyway after the fact.
So your terms and that term on that on when you originate, that's all stays the same, correct? I
Yep,
mean, that's the
100%.
nice beauty of it. And then you're basically, as long as you qualify for both, you're a non-contingent buyer is what you are, and that's
Mm-hmm.
really the beauty, right? That's what you're
Yes.
talking about there.
Yep. Yeah, and it allows you to get in with less, and then you can choose to put more down to lower that payment and get that loan lower. And the nice thing is for anyone that doesn't know, when you put 20% down, you actually get a worse rate than if you did less than 20% down. And the reason that is because if you do less than 20% down, you have PMI. So the private mortgage insurance protects the bank for default and all that kind of stuff. So the only catch to the recast is it costs $500 to do, and you have to make at least one payment of your 5% down loan to before you can recast.
Okay. So did I hear you correctly? You said it's worse for the rate when there is PMI or not?
It's
20% down.
Yeah, the rate is better if you did 19.9% down compared to if you did 20% down.
By how much? I mean, is there a considerable amount, or is it?
It's usually
I suppose it varies, but
an eighth or a quarter. Yeah, it'll vary, but an
eighth or a
quarter. Yeah.
That it would be higher because there is no PMI.
Mm-hmm.
Okay, when you put down 20%, but then but you're not paying PMI.
Right, but if you're gonna recast, you're only paying PMI for a payment or two anyway.
Okay. Yep. Okay.
So then it doesn't necessarily really matter. And then the only other thing I wanted to make sure on the idea of this is to just make sure you get pre-approved early. So before you actively start looking, because you're going to find a house that you like, and if you're not pre-approved early enough, it's gone before you get pre-approved. Because you never know what kind of little complications are going to show up. So I have a borrower right now, finally got pre-approved, but it took about a month because he's a salary borrower. He's a trainer. He's a salary borrower, but he had worked overseas and worked in other countries. So then getting like a 2-year verification of employment was a mess. So it took us a long time to get stuff translated, work the means of communication and whatnot, just to try and get to the point where we could get him pre-approved. Now that he's good to go. But luckily he was patient for it, but it took a little bit of work to get there.
Well, I think that's a good point to make, and we talk about it so often, but it's almost like second nature for us that hey, know what you're comfortable with and what you qualify for before you even really get out. It's no different than you shopping for your car with champagne in the back in the trunk. Get qualified, know what you're gonna. No, I didn't mean to go there. I did, but I didn't.
Yeah.
Anyway,
fair. It's fair. Yeah.
So no, you definitely want to know, in what interest rates are, what the payment is, and where you're comfortable and where you want to be, because I think a lot of people are finding that, they'd like to be at X, and well, that's probably realistically with where home prices are and now interest rates rising a little bit, it may not be the payment you're exactly expecting. And so you want to know everything you can, potentially eyes wide open, going into the market and trying to compete. So no question.
Yeah, we got a question here from Rick Mahone, and Scott, this will be addressed towards you.
Okay.
I have been told we can't put non-refundable language in a VA or FHA loan. Is that true?
Ooh, that's probably that. I would probably have to. Hi, Rick. Thanks for reaching out. Really appreciate you listening in. I would have to agree with you on a VA or FHA, because yes, that is a very good point. That non-refundable, typically, earnest monies are going to be refundable for FHA and VA. So I would agree with you.
Yep. And I'd have to. The beautiful thing about where I work, it's easy for me to send an email and get an answer in like 5 minutes, but I would have to double check on that with underwriting, but I would also assume that would be the case.
Yeah, I would have to agree.
That seems more like a conventional thing, because conventional you can get away with a lot more than you can in those government loans.
No, absolutely. Thanks so much for the question, Rick. Really appreciate you reaching out. So
yeah, thank you, Rick. I'm just typing that now. So okay, beautiful. Well, Scott, anything else to add to today's podcast?
Hey, happy St. Patrick's Day, everybody.
I celebrated early in my car.
Yeah, happy St. Patrick's Day. Here's to you.
Oh, there you go. Here.
Yeah, there you go.
$2 bill.
$2.
Yeah.
Go get a $2 Chuck.
Yeah.
I don't know if they even have that anymore. So.
Yeah, you'll have a headache later.
Yeah, exactly. Well, thanks everybody. I really appreciate you listening in, and hopefully we shared some insight of what's going on here in the Twin City market. Thank you, Justice. Always a pleasure to talk with you and share. Anything you got to wrap it up, but always looking for likes on our like button, and that's about it for today.
All right, beautiful. Well, yeah,
All right.
Thanks for watching and listening to the Evolution Real Estate Podcast, where, that evolution just never stops.